Hey everyone, A-Market traders and A-Market partners, welcome back to YouTube channel. In this video, I am going to explain how to trade in a volatile market and even how to identify low volatile and high volatile market. Let me ask you a simple question. Are you afraid of trading in volatile market? If yes, then definitely I am going to explain this video in a most efficient manner. So without wasting any time, I am starting with this. The topic is Bollinger Band, how to trade volatility. So without wasting any time, I am starting with this. First of all, let me explain you how to plot volatile indicator. So Bollinger Band indicator. So just jump onto this icon and select this Bollinger Band under trend section if you want, or in under all, just select this Bollinger Band, and by default you are going to see this period is 10 period and deviation is of 2. So I'm not going to change this by default setting. I'm keeping as it is, and I'm just going to plot this. Now if you see this, at some point Bollinger Band is having a wider range, at some point Bollinger Band is having a narrow range. This is how you can easily spot the high volatile and low volatile scenario. If you look at this, this is where Bollinger Band is squeezing, Bollinger Band is getting narrowed, Bollinger Band range is getting narrower at this point. If you look at the scenario, this is where Bollinger Band range is getting narrow. So easily we can spot it. Yes, this is where low volatility is going on. As and when Bollinger Band is squeezing out, expanding out, and if you see that the range is expanding, we can easily get the idea. Yes, over here volatility is expanding or increasing. So this is how we can easily spot the volatility region where the low volatile scenario is going on or high volatile scenario is going on. And you can use multi time frame analysis also. Example, if on a weekly time frame high volatile, it means a Bollinger Band range is expanding. We can easily get the idea. Yes, on a weekly scale range expansion is going on. It means on a daily time frame, what any kind of pullback is going on, you can easily get the benefit of the same, and you can convert this opportunity into a better trade, right? So this is our example. If you look at the scenario of monthly time frame, let me explain you this. So this is a monthly time. If you see this price bounce back to this upper band of the Bollinger Band, and obviously if you look at this, the wider range is going on. That means there is a very high probability if pullback is there, if price is rejecting from the same point, we can expect price to revert nearby the middle band of this range or the lower band of this Bollinger Band. So the middle band is the moving average. Let me show you this moving average. The middle band is the moving average. You can change it this average to 21 period if you want. So I can change this to 21 period, or I can change this to whatever the period that I want, right? So by default, majority of the platform used to keep this as a 21 or 20 period average, and two standard deviation they used to keep it, right? So if you look at this scenario, this is a beautiful scenario. In this period, Bollinger Band, narrow Bollinger Band going on, and we can easily get the idea. Yes, on a monthly scale, volatility is contracting. So definitely in upcoming time, we can expect a strong upward expansion or strong expansion in either of the direction. Bollinger Band doesn't show you the direction of the market, but definitely it will help you. It will help us to identify whether the market is going to expand or not. This will be we will be getting an idea using this Bollinger Band, right? So if you see this Bollinger Band, then after expanded and the price moved like anything. If you let me show you the price, this is the 2080 is the breakout point. Then after price jump onto the level of 4,200, almost price got doubled in a span of 4 to 5 months. This is how this Bollinger Band used to give us benefit, right? Now you get the idea how to understand the low volatile, high volatile region. Now let me explain you some of the methods using this Bollinger Band. How to trade the volatile market. First of all, let me explain you one of the powerful method, Bollinger Band squeeze out expansion method. So how to trade this? First of all, how to spot this? As and when you see that Bollinger Band is getting contracted or getting narrower, So if you look at the scenario, this is the wider Bollinger Band range. As and when you spot the Bollinger Band is getting contracted and price is also getting in a trading in a consolidation phase, you can also merge the chart pattern over here. If you look at this, there is a formation of flag and pole pattern. This is the flag and this is the pole. So into the flag zone, the Bollinger Band is getting contracted, and as and when price Bollinger Band used to get expanded and price used to break this narrow range of this Bollinger Band, this is the point where we can enter our trade, confluencing with the chart pattern and see the result we get over here. So this is called as Bollinger Band expansion. Most powerful method of trading from low volatile to high volatile scenario. So if you like to trade a fast momentum, or if you want to optimize your trade, and if you want to capture the trade in a short span of time, a bigger sort of move, definitely you can use this concept, a Bollinger Bands expansion method. For the same, you just need to spot the contraction of the Bollinger Band, or you can spot the lower volatile scenario of Bollinger Band, and then wait for the breakout of that narrow range and just enter your trade. If you want, you can merge chart patterns, you can merge price action, you can merge any sort of technical tools. If you want to merge, example, if I add Fibonacci over here, price retrace somewhat near to 38.2 Fibonacci level. Let me plot this from this high to low. So price retrace back to 38.2 Fibonacci level, and from the same point price continue the same existing trend. So I can merge any of that, I can add any of the tool over here and I can get benefit, right? Now if you see this is the point where price is getting some good number of time. So what can I do is I can just wait for Bollinger Band to get contracted. So there might be a possibility that squeezing of the Bollinger Band can be onto the same time frame or on any of the time. For example, it can be on the lower degree time frames also, or it can be on the higher degree time frame also. Let me track it on a first lower degree time frame. So I'm using H4 time frame as a lower degree time frame. So on a H4 time frame, if you see this, there is a clear contraction is going on at this price point. If you look at the scenario, there is a clean Bollinger Band squeezing out is going on, and see the breakout used to be there, and see the momentum then after. If you want to trade more powerful methods, wait for the price breakout squeezing of the Bollinger Band nearby the important resistance or important support. Example, this is an important support, this is an important resistance point. If Bollinger Band is squeezing at this price point, nearby this price point, then definitely you are going to get a beautiful opportunity after this. So you are having a clear clarity that price is having a structure of higher highs and higher low, and it's trading at the important resistance, and also Bollinger Band is getting contracted nearby the same. So if price is breaking out this Bollinger Band range, there is a probability of price to continue the same existing trend. So definitely you can get a beautiful trade. So see the reward you get over here. This might be your stop loss, this low might be your stop loss, and you get a most 1:4 or 5 or more than this risk reward over here. So this is how we can track this, right? Probably you can even look at the higher time frames to spot the contraction. So if you look at the weekly time frame, there was a clear formation of a Bollinger Band squeezing out. Bollinger Band is getting contracted. This is the wider range, and then after Bollinger Band is getting contracted, and again Bollinger Band expansion used to be there after this point. Also, there is a clean formation of 6 to 7 weeks consolidation, and then there is a breakout of the same. You get a beautiful trade opportunity over here. If you look at this current scenario, there used to be a, see, this is the low volatile scenario. Bollinger Band is squeezing out, Bollinger Band is contracting, and then after Bollinger Band is getting expanded and the breakout of this range is to be there, and you get a good opportunity over here. So this is how you can spot the low risk high reward opportunity, or you can identify the faster momentum opportunity using this approach, right? Now let me show you another method using this Bollinger Band approach. So this is one of my favorite method. So I'm going to use another indicator over here. I'm going to add few indicators, few moving averages. So I'm going to add four averages, 50 period. Then I'm going to add 21 period. So you can change the color if you want. I'm not going to change the color of the same. I'm going to add one more 75. Then I'm going to add 100 period average, and also I'm going to add 200 period average. So why I'm adding this, I will show you the powerful result after this, right? So once you add this averages, now wait for I'm just changing the color of the last two averages, the 100 period and 200 period. I'm keeping 100 as a red and 200 as a black, just to find out the alignment of the averages. If 200 is trading, if 100 is trading about 200, that means yes, this is a good alignment is going on. I can look for the same direction setup. Example, now let me show you this beautiful example. I'm just hiding this 100 period for the time being. Now look at the scenario. There is a clear Bollinger Band contraction is going on at the same price point. This all the moving averages are getting flattened out. If you look at this, all the averages are getting at the same point and synchronizing at the same point. This is the point where we can expect a blast or expansion, higher volatility scenario. Why I'm saying this? This is where if you look at the price, moving averages are getting synchronized. It means that yes, this is the point where consolidation is going on. Also, Bollinger Band is contracting out. It means that now we can expect moving average expansion. Simultaneously, we can expect Bollinger Band expansion, and this is where you can get a beautiful trade setup. As and when price breaks some important high or low, look for the entry and see the reward you get over here. This is more than 1:10. This would be your stop loss, and contrary, this is your reward. This is how you can spot low risk, high reward opportunity. Let me show you this on a daily time frame also. So if you look at the scenario, this is a very interesting case. Why I'm saying this? There is a clear formation of low Bollinger Band contraction is going on. Simultaneously, moving averages are getting synchronized, also getting aligned at this point. And then after there's a breakdown of the same, and you get a beautiful trade after that, right? Now let me show you one more example of Bollinger Band expansion method. So if you look at the scenario, just 1 minute, let me show you a bearish example also. Let me show you this bullish example first. This is a picture perfect example. There is a clean formation of a Bollinger Band contraction. At the same point, 4 out of 6 moving averages are getting synchronized at the same price point, and Bollinger Band is also getting contracted. Onto the break of the important swing or high or low, just enter your trade and see the risk reward you get over here. So this is how you can treat this Bollinger Band expansion method with moving average expansion, right? Now let me show you a bearish example. So let me consider this bearish example. Now if you look at the scenario, there is a formation of a Bollinger Band contraction. Also, moving averages are getting synchronized and aligned at the same price point. Also, this formation is happening at an important support. As and when price breaks the low of the range, you can expect moving average expansion with Bollinger Band expansion, and you can expect such risk reward, right? So Bollinger Bands helps you to identify the low volatile scenario, low contraction, contracting volatility contraction scenario, and using this approach, you can plan your trade in such a manner from the place you can expect expansion of the trend, right? So using this approach, you can expect a good risk reward. So again, I am saying that Bollinger Band didn't show us an idea that this would be the case of trend. This would be the trend. It didn't show us the trend of the particular asset. It helps us to get the idea of expansion. What kind of it will not give us the idea of what kind of direction would be there, but it will give us a clear idea. Yes, this would be the time of clean expansion scenario, right? Using this approach and confluencing with the price action or some sort of indicators, we can trade in a most efficient way, right? So these are the methods. Now I am summarizing this. See, first of all, what you can do is just look for the important price location example. I am removing all the averages. Just look for the important price location example. If any sort of squeezing Bollinger Band contraction is happening at an important support, look for that important support and important resistance example. This is the point. This is the important support, right? Why I'm saying this? Just this is a random example. Why I'm saying this? This is an important support. There's a breakout of this. There's a clean breakout from this point. Price retested this point, And if you look at this, Bollinger Band is contracting at this point. Now, you understand this concept that there is a change in polarity. Support used to become a resistance, or resistance used to become support. Now, if you look at this, that resistance becomes support now, and Bollinger Band is getting contracted. Also, consolidation is happening at this point of time. Now, till this, if you look at this, since 2030 or more than this, since this odd session, Bollinger Band is contracting, low volatile scenario is going on. Now definitely we can expect a clear a volatility expansion. So onto the break of this range, we can easily enter the trade considering support system work, support psychology. Also we can use Fibonacci method. Also we can use any of the method we want and see the reward we get. In a span of few sessions, this is a consolidation of more than I can say 30 periods, 30 days, and in a span of 2, 3 or 4 sessions, we get almost reward of from 1300, it jumps to 1680. So in a span of 4 sessions, we get almost 3 times of the risk that we have taken over here. So this is how, this is the first method. Look for the contraction nearby the important location. Second method, use this contraction method this with the moving averages convergence. If convergence is happening simultaneously with the Bollinger Band contraction, look for the point from where moving average expansion is also possible, and Bollinger Band expansion is also possible. So by doing this, we can enter the best trade out of it, right? If you want, if you can use example, if price is trading in a consolidation market, sideways market, you can use lower Bollinger Band and upper Bollinger Band for the mean reversion sort of trades, right? Now you can use Bollinger Band in a multiple time frame also. Example, if weekly time frame or monthly time frame is showing you that yes, this is a expansion is going on a weekly time frame, that means that on a daily time frame, any lower any contraction or any resumption of the existing trend, that would be the clean opportunity for you, right? So this is how you can manage your trade in a most efficient manner. Let me show you this final example. So this one example, if you look at this is a clean breakout of the monthly Bollinger Band contraction. And if you look at this on a weekly scale, as and when price used to retest or price used to halt, and as and when price used to break the high of the same, you can expect trend continuation. Why? Because on a monthly scale, there is a clear formation of Bollinger expansion, so we can expect further upward continuation on a lower degree time frame. So by doing this example, if let me show you the same on a daily time frame also. If any sort of Bollinger Band contraction is happening on a daily time frame, so you can expect upward continuation rather than downward continuation. Why? Because on a monthly scale, there is a clear formation of a Bollinger expansion on towards the upward side. So we can expect further upward continuation as and when price breaks the lower contraction, Bollinger Band expansion on a daily time frame, right? So this is how we can use Bollinger Band in a most efficient manner. It not only help us to identify the low or high volatile scenario, but it also help us to identify the low risk high reward bet in such a beautiful manner, right? So if you understand this video, if you enjoy this video, for this kind of updates, stay updated with AMarkets. Thank you. Bye bye.